For a long time, I was sure that the market moved based on the levels. If there was support, there would be a rebound. If there was a resistance, there would be a reversal or a breakout. The more lines I drew on the chart, the more it seems that I was controlling the market. But the more I traded on the levels, the more often I saw the same pattern. Everyone sees the same level. Everyone expects the same movement. Everyone enters to the bulk, and the market does the opposite. You wait for the rebound, it breaks through. You wait for a breakout, it comes out that it's same point. I ask myself a simple question. If levels explain everything to everyone, then why do people lose at these levels? And then I realized that level is not the reason for the movement. It's a place where the interests of money, the crowd, and big players collide. Today, I will show you what really drives the market and analyze three signals and a real chart so you can see by yourself that the movement is born from a line on the screen. If you want to stop believing in the fairy tale that levels are everything and start understanding what really drives the prices, so subscribe to my channel. On my Telegram channel, I show you the market from the inside, how movements are formed, how big capital uses level as a trap for the crowd, and how to look not to look from the pretty side, but look like level points from the money entries the market. There you will also find my trade analysis, exclusive materials, and the opportunity to connect to copy trading, an AI bot that helps you to see logic rather than getting caught up on the nights. The link is below the video. Now it's time to figure it out the real market. Classical picture. The price hit the level several times, and the crowd already remembered this line as a serious resistance. Everyone says if it breaks through, it will fly. At some point, the candles really shoots up, break through the level, and forms a new high. At this moment, most traders enters into purchases. They see the breakout of the level, but they don't see what's behind it. What interests me here, how long the price stays above the level, and whether the momentum continues with the next candle or not, and how the breakout candle closes with a full body or with a long shadow above. Look, the candle shoot up, but close with a huge shadow above, and a body would return almost the level. The next candle is already lower, and the momentum does not continue. This is not a breakout. This is a hand for liquidity behind the level where the sellers stops and the buyers pending orders. A large player allowed the prices to fly in the order to collect all of this. And as soon as the liquidity is collected, there is no point in keeping the price high. At this point, I'm not trying to catch up at the movement. I wait for the candle to close, see the weakness of the breakout, see that the new high is not the hill, and enter downwards against those who bought the hope of the continuation. In a minute or two, the market returns below the level, and everyone who placed stops behind the level becomes fuel of the movement. This is the first example of the price moving not because of the level, but because of the money of those who were hiding behind it. Now, let's look at the other side. Here is the support level. The price has rebounded from it 3 times. At first glance, it seems like a strong zone. Beginners love to buy from the level in such a picture, but let's take a more mature approach. The first rebound is strong, with the price making a decent upward movement. The second is shorter. The third is barely noticeable. Each subsequent maximize after the rebound is lower than the previous one. What does this mean? They are buyers, but their strength is diminishing. Each new approach to the level is not a confirmation of this stillness, but it's a gradual depletion of demand. In this case, the level is not a support, but a cap that keeps price in one place while a large player carefully distributes the volume. At some point, buyers simply run out of the crowd and habitually takes from the level, and the market makes a sharp break downwards. In such situation, I do not buy from the level, as depicate the text though. I watch how the quality of the rebound changes. As soon as I see the reaction has become weak and it's clear from the closing of the candles and demand is melting away, I prepare not for a rebound, but for a breakout. The price breaks through the level, consolidates below it, and here the logic is simple. I am not with those who believe in the lines. The third thing is that really opened my eyes was movement before the news. Many people think that the market starts to move when the news come out. In fact, the large capital starts making decisions much earlier. Look at this section. It seems like a normal sideways movements at the level. The price goes back and forth. Visually nothing interesting. But if you look closely at this structure, the picture is different. The lows are getting slightly higher. The highs are starting to narrow. Candles with long tails down and appearing moving often. And the upward movements are becoming much more confident than the downward ones. This means that someone is carefully building up a position while the crowd is bored. At this level, then the news break out. And the price suddenly shoots in the direction that the big players had prepared in advance. The crowd says the news moved the market. In fact, the news is just a catalyst, a reason for the sharp release of the position. And that has already been built up in such situation. I don't wait for the numbers on the calendar. I watch how the structure changed before the news. If I see that someone is methodically holding the price and that every pullback is being bought up and sales are getting weaker, I'm ready for movement even before the event. And when the market explodes, I'm ready with it, not against it. This is the third example of how movement is not born from the level, but from how large players use level as a mask for their intentions. And here is what's important to understand. The market doesn't move because a line is drawn on the chart. It moves because there are stops and limits behind the line. Someone is ready to buy or sell aggressively. A big player is using the crowd as a fuel. The structure of the movement is ready for a phase to change. The level is just meeting the place, but it is people and money that drives the market. Incidentally, this week the market changed more than it seems at first glance. Reuters published a report stating that liquidity in the US currency market fell by 14% in just one day due to the mass exodus of automated market makers after an unexpected surge in volatility during the Asian session. What does this mean? When liquidity is thinner, the market begins to break levels as if did not exist. Prices move faster, breakouts become sharper, and false movements become deeper. The crowd sees a breakout, jump in, and 10 seconds later, the market reversed because it wasn't trend. It was a hold in liquidity. At this moment, I was sitting on this chart, and when I saw a sharp gap in the candles with minimal volume, I realized this is not a trend. This is a spike. I entered a sell trade, and the market literally fell exactly where there was no order. A clean, sharp profit, and that's the real reason for the market movement, not the level, but the money that stopped holding it. At some point, I stopped drawing levels as scared boundaries and started looking at what was happening around them. Who was standing there, where the crowd was hiding their feet, and where the big players were gathering liquidity, where the movement was being prepared in advance, and where we were simply being shown a pretty picture. The market doesn't move because of lines, it moves because of the money behind them. And once you understand that, trading turns from a chaos into a system. If you want to analyze such situation with me live, so go to my Telegram. There I show you real trades, analysis of structure, the logical of movements, plus I give access to an AI bot and copy trading, so you can not only watch but also earn money with me. The link is below the video. Like it, write in the comments how you used to look at the levels, and see you in the next video.